you've got Bitcoin as this hard money asset. Everybody understands that very well. That we have the ETF. I think the case for allocating to Bitcoin is, more clear than ever. And Larry Fink's gone on TV and shoulder bags and drilled down the thesis for Bitcoin. I don't think that's debated by anyone. But then you've kind of got this question of, okay, well, if I want to go further out on the risk spectrum, what should I allocate to? There's all these, very highly obfuscated, a lot of technical jargon, questions about the value accrual for a lot of these altcoins that are, mid 9-figure, $1 billion, $2 billion market cap tokens. And, the reality is the average retail participant has a very low likelihood of, 10 or 15xing on something like that.
All right, guys, bang, bang. Today's conversation is with Will Clemente. The young wizard is back, co-founder of Reflexivity Research. We talk about Bitcoin, Ether, Solana, meme coins, how he actually allocates his capital in his portfolio, what you should be paying attention to, whether it's ETFs, regulation, or culturally relevant ideas. All of this is Will trying to unpack what's happening in the market, how you should be thinking about investing, and where opportunity lies in the coming 18 to 24 months. Will doesn't disappoint. He's always in top form, and this was no different. I hope you enjoy this conversation with Will Clemente. I thought a great place to start the conversation would be Bitcoin, the king of the crypto market. It's just going sideways. 3 of the last 4 times that it had broken through an all-time high, it doubled very quickly. That hasn't happened here. And on that 4th attempt, the one time it didn't double very quickly, it kind of went sideways for a while and then took off. Is that what you're expecting to happen with Bitcoin through the summer or the end of the year?
First of all, it's great to be back in person once again, back in the studio. That's kind of my base case is Bitcoin is just consolidating below all-time highs. It's kind of difficult to say exactly how long that'll take place. Some people are saying that we're going to have this kind of, sideways summer. That's what some people are kind of coining it.
Great alliteration.
Yeah. I think that the price action very much resembles late 2020. So if we go back to like the middle of last year, I posted this fractal. It was almost kind of a joke when Bitcoin was trading like 31K. And I basically just took the price action from the end of 2022 and then overlaid it on the price action at the time. And it's followed it almost perfectly of just, partially it's just Bitcoin's gone up only as it did at the end of 2020. It's all-time highs. But then if you remember at the end of 2020, we consolidated below 20K for some period of time. Obviously, this is slightly different because we broke the all-time highs, but very similar in terms of, you just have a lot of sellers at the prior highs that maybe had been holding Bitcoin for some time, are looking to offload once you get back to their kind of cost basis. And so they can kind of get out at break even. And then also just in general, market very rarely, goes up to all-time highs and then pierces straight through without rejecting at least 1 or 2 times off of that. And the other piece is just, following the derivatives data. Usually the way this stuff goes is, you get people to, get leverage long right at that kind of, all-time high breakout or whatever like key level that Bitcoin is consolidating up against. You flush those people out and then kind of go sideways until you almost get this apathy in the base of derivatives traders until they're no longer, aggressively super, long on 20x leverage or whatever it is.
Mm-hmm.
And then Bitcoin seems to move. So one thing I've been watching is like the derivative stuff. We've seen that cool off a bit over the last month or two, things like watching the futures basis, which looks at the spread between spot and the 3-month future. It's kind of a proxy for sentiment and how long people want to be in the market, as well as funding rates, which just looks at the difference between the perp price and the spot price that the perps are pegged to through that funding rate. The only problem is now that Athena's around, and this is something Quinn Thompson has talked about a lot, Athena has kind of thrown off those measures a little bit because it's putting downwards pressure on both the basis and the funding rate, specifically for ETH. So I think you've got to take those readings a bit, with a bit of a grain of salt. But I think the relative changes still are pretty valuable. And what we've seen since the initial run up in February is that the 3-month futures basis has come down and it's kind of, just grinding down near like 5% or so. Funding rates have kind of cooled off. We saw a lot of open interest that came in on this recent move as Bitcoin got rejected off of 72K a couple days ago. But I don't have any super strong short-term view on the market outside of the derivatives market is starting to cool off and isn't as frothy as it was earlier this year. Meanwhile, we're continuing to see inflows into the market, which is represented by on-chain data of stablecoin aggregate supplies, which is one thing that I look at pretty closely because that gives you a proxy of capital inflows, but also the amount of liquidity on chain that's being utilized in DeFi or whatever it is. And then the other piece is the ETF inflows that we started to see. So one thing I had been posting on Twitter for a little bit is the 14-day change in the holdings of the ETFs. So you had this kind of first wave up, obviously, like right after the ETFs launched, that kind of cooled off. And then now it seems like over the last 2 or 3 weeks, we've started to see this kind of second move up, maybe beginning in the ETF flows. I think some of that, which is reflected by the types of participants that were revealed in some of these 13F filings, are probably just long spot and then shorting the future to put on that basis trade. So they're not like directionally long necessarily. But overall, we are starting to see those ETF flows.
How does that affect the price, right? So if I'm long spot, but I'm shorting futures, is that net positive to price, or is it basically just negating it? Like I understand the exposure, but how do you expect the actual impact on price?
Yeah, it's net neutral because the spot gets pushed up, but the future gets pushed down. So it's net neutral on the price.
And so for those that maybe don't spend a lot of time on this on a day-to-day basis, because it is net neutral, even though you're seeing ETF inflows, and some are pretty big number, I mean, hundreds of millions of dollars, in a given week, but you're not seeing price necessarily run, is because that is only one part of the trade these people are putting on. And so it's not really a net increase in the market cap.
Yeah. I mean, that's true. But also I would just say, like, people forget, Bitcoin's a big market. It's a really liquid market. Like, these are big numbers that are coming through, through the ETFs. We saw almost $1 billion day last week, which is the second largest inflow day since inception. But, there's still a lot of volume that takes place outside of the ETFs. So I think the ETFs are something that's, a good kind of narrative or like Schelling point for the market to grasp onto. But I don't think it's an end all be all. We can have a down day if there's net inflows, et cetera. I also think the ETF inflows in themselves aren't really a good proxy for like where the market is going to go on like a day-to-day basis, if that makes sense. The general trend of the flows is important, but if you have one day of some certain reading, like I don't think that gives you any a forward-looking insight into what's going to take place, because the ETFs are partially just a reflection of where the market trades. We've seen people freak out because you have several days of net outflows in the market, but the market went down, people were selling, the market went down. And then also, people getting overly excited when we see inflows, but the market has gone up. Well, the market went up, people were buying. That's, you're just seeing that people had bought for the day as the price went up. So I don't really follow them on like a day-to-day basis, but I do think, things like looking at, these kind of broader trends, or maybe, looking at like a 7-day moving average or something of the ETF flows is interesting, just to see like, are we starting to see, that kind of second wave up that we've been waiting to see since that first one in those ETF flows.
Got it. When we look at the next couple of assets, Ether, Solana, maybe the next 3 or 4, historically you would expect Bitcoin to outperform stocks. And then you would expect Ether to outperform Bitcoin, maybe Solana to outperform Ether, and it's kind of just like a market cap game. Bitcoin's been very strong this year compared to some of these other assets. Is that a good thing, a bad thing? Should we expect it to continue? Like, how do you just kind of think of, maybe Bitcoin, Ether, and Solana? Actually, Bitcoin and Solana seem to be outperforming Ether with an ETF inbound. Maybe that'll change, but like, it's not following kind of the real simple, small brain, just, bigger market cap, lower return. Yeah,
that's been one very interesting thing this time around. I got involved in the space at the beginning of 2020, so I was around for last cycle, but not 2017. But I remember in 2020, it was very much, okay, you go out on the risk spectrum, those things are going to have higher beta to Bitcoin, and you just get long all the vaporware and all that stuff goes up. We have not seen that this time. A lot of the alt BTC or alt Sol pairs have just been bleeding out for several months now, and it hasn't really been as simple as just buy whatever vaporware altcoin and you'll outperform BTC because it's less liquidity and it's further off on the risk spectrum, which I think is a good thing for the market overall, because people are thinking about what they're allocating to.
Keeps people honest.
Yeah, for sure. But we have seen dramatic outperformance in the AI coins, but then more so the meme coins. And I think that's kind of this reflection of the market sentiment towards a lot of the tokens that frankly exist in crypto. And, do they have value accrual? And then I think the even bigger one is kind of the supply distribution and how those tokens get distributed over time. So, in 2020, 2021, a lot of this was kind of obfuscated away. And we didn't have, now there's data platforms you can go on and just look at all the token unlocks and see when exactly the cliff is going to unlock a certain amount of tokens, et cetera. We didn't have that really. It was very hard to find that data last cycle. So I don't think people really fully understood the game that was being played. But now I think that's very well understood by the market, and that, you raise a bunch of money up front. And again, I'm not completely, speaking negatively against this, because, you need capital formation and all these types of things. But I think there's a lot of questions being raised about what's the optimal way to do it. Currently it's, you raise a bunch of money from VCs, maybe go through a couple rounds of fundraising, you launch the token, you float a very small percent of it, like, 10 or 15% of the token circulating supply. And then the idea is that over time, you unlock more and more tokens. The VCs are locked up for 2 or 3 years. And then ideally the tokens run up by then because the float was low and the price ran up, and then finds equilibrium before the VCs or whoever, was an early backer is able to exit. We've seen a lot of these, low float, high FDV tokens just bleed out since the launch. And I just think that's the market kind of understanding what's taking place. While meanwhile, you have these meme coins where, they're a lot of them are fair launches. There's no pre-sale, so somebody just launches them. The 100% of the supply is out there, circulating, and it's much fair. I won't say it's the most optimal way to do it. I don't know if there is an optimal way to distribute tokens. That's been a widely debated topic for a very long time, but the meme coin launches are definitely much fairer than these kind of low float, high FDV games that are being played. And then the other thing is just if I'm a retail market participant, like take myself, I don't trade with any exorbitant amount of money, and so I'm able to get into a lot of these memes, and I'd rather play around in that sandbox and trade these things where some of these things can run in a matter of days from a couple million market cap to, we've seen north of, mid 9 figures in some cases. And so, essentially retail has the ability to basically, capture a liquid unicorn, which I don't know any other market that you could do that. So, when I speak to a lot of other guys my age as well, that seems to kind of be the general sentiment is, you've got Bitcoin as this hard money asset. Everybody understands that very well. That way with the ETF, I think the case for allocating to Bitcoin is, more clear than ever. And Larry Fink's gone on TV and shoulder bags and kind of, drilled down the thesis for Bitcoin. I don't think that's debated by anyone. But then you've kind of got this question of, okay, well, if I want to go further out on the risk spectrum, what should I allocate to? There's all these, very highly obfuscated, a lot of technical jargon, questions about the value accrual for a lot of these altcoins that are, mid 9 figure, billion, $2 billion market cap tokens. And, the reality is the average retail participant has a very low likelihood of, 10 or 15xing on something like that, but they have a much higher probability of doing so with memes. So I think a lot of people that are coming into the space looking to speculate for the first time are participating there. And then also, I guess the last thing I would add is just, the pool of market participants that are playing that game is a lot less sophisticated than the pool of market participants that are trading Bitcoin. Like to have edge in trading Bitcoin, especially at this point, I think maybe this was a different story even before 2020. But I think now, you're just think about it, you're going to go play poker at a table, right? You're going to go play with, these high stakes guys that are, that have been playing for 25 years, or you're going to go sit at, the table with people on your same skill level. I think that's how a lot of people are thinking about participating in these meme coin markets as well.
When we look at maybe with large caps first, I am very long Bitcoin, have been for a while, don't plan to sell, look at it as a grandchild type holding. I'm going to hold it and give it to my grandchildren at some point. I had some Ethereum. That's where I started my kind of crypto journey, mining Ethereum back in 2016. But I sold that, I think, end of last year, beginning of this year, whenever it was, and bought Solana instead. And it was very much a decision like, I think that Solana is going to outperform Ethereum moving forward. I want to, make this change in my personal portfolio. So far that has been true, but I don't hear any talk of a Solana ETF in the United States. I do see the Ether one coming. How do you think about those two as like the two big competitors, or at least by market cap, the two largest competitors for like the smart contract landscape? And like, is it they both should go up? Do you think one will go up more than the other?
Yeah, I definitely think ETH has more Lindy than Sol just because it's been around longer. I think ETH probably has a higher likelihood of getting adopted by a lot of these institutions. I mean, we saw BlackRock deposit a couple $100 million on ETH as opposed to Solana. But at the same time, I think, a lot of retail market participants, again, especially I hate to keep bringing it up, but a lot of these meme coin games are taking place on Solana because it's faster, lower fees, etc. So I think you've got some of that kind of dichotomy going on from a, allocation standpoint. Obviously, if the Ether spot ETF gets approved, then I think one important thing to keep in mind is you'll probably have a lot of portfolio managers or traditional guys that are going to look at this and say, I don't know a ton about crypto. I'm going to go 70-30, these two assets because these are the two ones that got approved by regulators. Mm-hmm. So I think ETH will get some flows just from that, just in terms of like general portfolio construction and how people think about it and what they're able to access in a compliant way, et cetera. One thing I'm keeping in mind in like the shorter term is once the ETH ETF theoretically does launch, which it seems like it's a done deal after they approved the general ability to launch ETFs, they just have to approve the individual filings now, is the people that have been arbitraging the ETH spread. So ETH traded as much as I believe a 60% discount at the bottom of the bear market. It was still quite discounted. Even you go back like a month and a half, and that was just people underestimating the odds of an ETH ETF getting approved. The question is once the conversion is allowed, what's going to be the net buying or net selling? I would expect that there's probably a couple $1 billion of sell pressure that maybe negates out any initial inflows on ETH in the same way that we kind of saw it play out for Bitcoin when GBTC got pulled out of Grayscale at the beginning. Yeah,
I'm very fascinated by what is going to happen between those two, because it feels like Solana versus Ethereum is what Bitcoin versus Ethereum used to be. Right. It was very tribal. It was very much like, I'm better than you. You're better than me. I don't agree. I agree, whatever. I think now it's very clear to people like Bitcoin is trying to be one thing and Ethereum's trying to be this other thing. And maybe there's some like online tribalism just in the community, but it's not really things where on a substance basis they're competing with each other. Ethereum Solana feels a lot closer. Like it feels much more like, two social networks going at each other rather than kind of just two random technology companies. And so, it does feel like that battle is more a winner take all, or definitely winner take most. But then you look at the market caps and Ethereum's market cap is still growing, so is Solana's, and so maybe actually the theoretical doesn't apply, and it's like no. We're all drastically underestimating how big of a market opportunity this is, and there will be 2, 3, 4, 5 different winners, and they'll all get significant market share. And trying to pick between the two is actually a losing game.
Today's episode is brought to you by Meanwhile. Meanwhile is the world's first licensed and regulated life insurance company built for the Bitcoin economy. Operating on the Bitcoin standard, they do everything in Bitcoin. You pay in Bitcoin. They pay claims to your family in Bitcoin. You take out policy loans entirely in Bitcoin when you need liquidity. Meanwhile, Bitcoin life insurance has redefined what it means to hodl. Protect your family from life's uncertainty in a broken financial system. Build intergenerational Bitcoin wealth while the cost of living skyrockets in dollar terms. Get all the tax and legal benefits of life insurance now in Bitcoin. They are actively binding policies today. Whether you are a long-term Bitcoiner or are just considering it for the first time, a Bitcoin whole life policy could make sense for your wealth plan. Visit their website, meanwhile.bm, to join the waitlist and to learn more about the world's first Bitcoin life insurer. Again, that's meanwhile.bm. Go check them out today.
I think when it comes to money, Bitcoin is, clearly money, and nothing's going to compete with Bitcoin being money. And historically, we see that money typically is a winner takes all game. So I don't think that we'll see anything that takes on Bitcoin for the kind of store value, monetary premium properties that it's established itself with. I agree with you wholeheartedly on the ETH stuff. I think where they messed up was kind of trying to pivot into this whole ultrasound money thing and then competing with Bitcoin as money. I don't frankly think that, Ether is money, and this whole idea that, all of these things need to try to be money is kind of silly. It'd be like saying that, all the companies in the tech bubble were competing with the US dollar. I just don't really like that framework. I think ETH should be trying to directly compete with Solana for kind of the smart contract landscape for sure. So the question is, how do you incentivize people to come on as opposed to Solana? And I think just the more competition, frankly, the better for the end user, right? As it is with almost anything in capitalism, because, you're going to have all these tough questions that have been asked over the last year and will continue to be asked about, what does an optimal smart contract platform look like? What are the trade-offs in design that you're willing to make? Maybe, what subset of users is willing to look at, using this specific smart contract that has these trade-offs versus a different market participant using a different one. So I think it's an interesting time to be involved.
When you think about investing in the space, there's a lot of people who are going to listen and watch this, and they're going to say to themselves, hey, I'm trying to think about how to allocate capital, right? Mm-hmm. There's going to be people who are overly conservative, and they're going to say, look, I'm going to put 1%, 3%, maybe 5% max into this industry. There's other people who are going to say, actually, this is the equivalent of the stock market to me, right? Is just like the older generation went and they put 60, 70, 80% of their wealth into the stock market and a variety of different strategies. I'm going to do that with this market. With the conservative people, if you only put 1 to 5%, it seems like you're more likely to kind of buy one asset, maybe buy Bitcoin, right? Maybe you stretch and you say, I'm gonna buy Bitcoin and Ethereum, or you buy some sort of index, market weighted index or something. I don't think there's a lot to kind of debate or talk about on that end. But the people who are treating the crypto universe as if it was the stock market that the older generation did. So they're going to go put a significant amount of money to work in that industry. How do you think about allocating capital? Is there a certain framework you use? Are you more kind of a barbell? Just talk about like the investing philosophy as you kind of look at the total landscape across, liquid tokens that are large cap. You've got the meme coin stuff. You've got public equities that are crypto related. Like there's a lot of opportunity here.
Yeah, I think there's a lot to unpack there, and it just depends on like your personal situation, your risk tolerance, what assets you do currently own. I guess I could talk about my personal portfolio construction. It's Bitcoin and cold storage that I've never touched and never plan to touch, and never plan to sell, because hopefully one day you don't have to sell that famous Bitcoin meme with Neo. Then I have Coinbase as kind of an index on the whole crypto space.
The public stock of Coinbase.
Public stock. Yeah. I should disclose. Obviously, I have a position in that. I think that's going to be viewed as kind of a proxy. Robinhood also increasingly so. I think they're kind of the biggest threat to Coinbase's business at the moment, as they've just came out last week that they're going to acquire Bitstamp for a couple $100 million. They've seen a lot of rise in retail volumes over the last couple weeks. Robinhood originally had delisted a lot of different assets because the regulators had kind of hinted at them about potentially violating some security stuff. But if that regulatory, kind of clarity comes about, then I think you'll start to see them push back into crypto again. But I don't own any Robinhood. I think Coinbase for now is kind of viewed as that index on the space that you can at least get access to publicly. I don't own any Solar ETH, but those are obviously the two leading kind of smart contract platforms, serve as kind of an index for all the activity taking place on these chains. So, for example, if you're bullish on activity taking place on Solana and then driving demand for the Solana token to participate in these on-chain games, then maybe you just allocate to Sol instead of trying to rotate in the kind of meme coin casino, if you will. But then I'll add on the other end of that barbell. So I would say, kind of Bitcoin and Coinbase on one side. And then on the other side for me, it's just a lot of these memes that I've been more actively trading. I know you've gotten a spew of texts from me over the last couple of months with these random coins.
Well, it's interesting with the meme coins, right? Because so much of the analysis is almost like, does the coin make you laugh? Right? Like if you think of a meme, right? Just forget coins for a second. If you think of a meme on the internet, if the meme says the truth, then no one wants to say what everyone believes, it usually takes off, right? If a meme is funny, it takes off. If it is culturally relevant, right, and like high quality, it takes off. So like if you think of these things that make like I'm talking about a traditional meme, on Twitter or something.
Yeah.
Like there's very, specific boxes that you can check, and you're like, why did this meme take off? And you can put it in one of these. Sometimes it checks more than one box, right? Yeah. When you and I have talked about some of the meme coins, sometimes it is, this is culturally relevant, right? Sometimes it's like, that made me laugh. Sometimes it is understanding some sort of trend or, something that fits a moment, right?
Yep.
And so when you look at it, it does feel like for the first time ever, these like cultural moments or word of mouth, even before kind of the digital age, now there's just like a ticker symbol to them. And I go back to, when Reddit went public, there's a Reddit coin. Interesting. Like you could buy Reddit, the stock, or you could buy Reddit, the coin. The coin gives you absolutely zero economic interest in the company. There's no rights. There's no, equity. There's no any of that stuff. But the coin went up more than the stock. That's interesting, right? And then if you go and you look at in some of the earnings reports, GameStop, when the Roaring Kitty stuff, when he came back, all of a sudden the stock went up, but actually the GME meme coin went up more. And I'm not here to say that buying the GME token is the same as buying the stock. Obviously, it's not, right? But I do think that people underestimate how much risk-taking happens on Wall Street. And it almost feels like we're getting a mirrored version. So you have the traditional stocks or assets, and now you're getting these like really are just brand relationship. And there's a whole generation of people who are saying like, I see something that's happening. All of the, kind of traditional folks are going to go buy this stock, but like, I'm just going to go buy the thing in my universe that plays off of something else. And so on the upside, it works. Now, obviously on the downside, there's nothing, there's no assets, there's no cash flow, there's no, rights. And so it's not as clean of a story, but it's fascinating to me that now we've seen multiple occasions where these meme coins are going up more than maybe their traditional counterparts are.
Yeah. I'll preface with saying participating in meme coins is totally gambling and is not rooted in any fundamentals. That being said, I think there's a lot of very real drivers of why they've taken off. One is markets rallying. People want to take on more risk. There's a wealth effect of asset prices going up. People have more money to play around with. Maybe a little deeper is I think, you've got wealth inequality, which is a result of monetary debasement. So as the U.S. has continually debased the currency, you bail out continuously not only these large corporations, but also the people that own assets. So the people that have already owned assets continually benefit for owning those assets, while the people that don't hold the assets get further and further behind. I also think in my generation, there's somewhat of what I like to call a dopamine epidemic. So, at your phone, you've got access to more dopamine than anyone in any previous generation. You can go on social media and see as many videos as you want. All types of explicit content that's there, for access online. The ability you can either, order things like nicotine or weed or other various substances like literally to your door now. I can go on my phone and order, horrible food straight to my door from my phone. All these things, I think, just the ease of access to dopamine is greater for my generation than ever. And that leads people to, want to speculate, want to take more risk, et cetera. And then I just think to go back to the wealth inequality piece, people feel priced out of things like real estate. I don't really see a path to create generational wealth from, maybe if I've already created wealth, I can preserve it by holding real estate. But I don't see really an option to create wealth of the same magnitude that, the baby boomers did when they began, buying houses back in the day. And I guess I could also toss in, I think this falls in with the dopamine epidemic stuff. If you look at just online gambling numbers, especially after years back, they shifted regulation to the state level from the federal level, gambling revenue has just gone up and to the right. And I just think a lot of that is going to come into these meme coins because it's, you feel like you have more control over it. You feel like you can kind of define your risk a bit, but also to be a bit more cynical, once all these things are going up only, then you have almost this perception that it's more plus EV to participate. Whether it actually is or not, I don't really think it's the thing that matters. It's what's the perception of, whether this is like a higher probability for me to, hit on whatever gamble that I'm essentially putting on through speculating on these memes. And I think our generation has a higher susceptibility to understanding these trends. I would actually say that younger guys have a much bigger edge in finding the next big meme coin over somebody that's older. As we grew up on, Instagram, Snapchat, Vine, that's a throwback. All these different apps, Twitter as well, obviously, where, we were constantly exposed to these memes. There's all, the spread of, sayings and culture and things like that was just much greater. And so I think over time, over the last 10 years, my generation very much kind of understood this kind of developed this keen eye for finding, you know, these phrases or things that are funny or are going to catch on, etc. So again, when I speak to people my age, it's, you know, they talk about, oh, I'd love to own Bitcoin, but you know, I feel like I'm not going to, you know, create generational wealth. Same with housing or index funds. I'm going to go speculate in this crypto casino. I don't know if that's a net good or bad thing for society, but that's just me being objective and, you know, observing what's going on.
I don't think it's different. I think people have been trying to get rich quick forever.
Yeah.
Right. In a weird way. Again, usually trying to get rich quick doesn't work. You know, great things take time to build. One of my favorite sayings is excellence doesn't have a watch. And so it's this idea that like, in order to build a great company, it's going to take 10, 20, 30 years. I mean, think of SpaceX. SpaceX was started, I think, in 2001, right? We're in 2024, 23 years later. And now it's like, oh shit, this works, right? Took 23 years to get there. It took them almost a decade to get the first rocket to not explode on the way up. And so when you think through that, you're like, all right, well, that's a great company. Took a long time. People who are like, hey, I'm going to go put some money in this, you know, coin or this stock or this, you know, whatever, and I'm going to get rich in 3 weeks. It's really hard, right? And probably unlikely. And so I do think that there is a weird dynamic of hopelessness leads to that, but also lack of education, right? And if you go back, I was having lunch with somebody over the weekend, and we were talking about Bill Miller, and he bought Amazon, crashed from $80 down to $6. He started buying on the way down and kept buying. He ended up being the largest individual outside shareholder other than Jeff Bezos. And he also ended up being he owned about 15% of the company across his fund, personal, everything. So you look at that and you're like, man, that sounds a lot like risk taking. That's scary, but it worked. So we celebrate and say this is amazing. For every one of those, how many people were buying a stock going down in 2001, 2000, whatever, and it went to zero?
Yeah.
Right.
And they were essentially meme coins, internet.
Yeah, of course. It was .com, right? Yeah. Now we have coin, whatever coin, they had whatever .com. And so I do think that in a weird way, this is a story as old as time. And every generation likes to look at the younger generation and be like, oh, look at you fools, right? But they're like, well, you guys are doing the same thing.
Yeah. The other interesting thing, I guess I would say, to differentiate the meme coins from maybe some of these, .com bubble vaporware companies, is that they're almost this kind of embodiment of this deep desire to be a tribal person and have connection with people. One very troubling statistic from my generation is just, if you look at loneliness, particularly male loneliness, it's skyrocketing. So I think to some extent, these meme coin communities, people also look at them as a way to build some camaraderie. You're posting memes together in the Discord and buying the dip together, like all these types of things. It's definitely sad, but I think that that's another piece of it too, especially if you have some coin that represents something that's significant to the person. So Vitalik actually wrote a blog post about this, but one specific example I'll give is this Trump coin, because it's very large now. It's like $700 million market cap. Trump has been very interesting because it's served as kind of this vehicle for people not only to speculate on their views on the election, but also just the general attention around Trump and likeness that they have towards Trump. Mm-hmm. So for example, when we got the verdict in the case last week or the week before, we saw the Trump coin dip down like 40%, but then ripped right back up and ripped to new all-time highs within a matter of a day or two. And that was almost like this representation of people's views on Trump. So in some ways, I think you can now spam social media with bots, and it's a very low cost, low friction way to kind of almost have online warfare, if you will. But now I think you'll start to see people vote with their dollars and express these views through some of these tokens. Mm-hmm. So, someone tries to ban something or whatever it may be, and the token associated with that thing starts to move. Another one was, this was a while ago, so I can mention it now, OpenAI. There were some issues around OpenAI, and Elon was saying it was supposed to be open source, and it's almost essentially now closed source. And so a token called Closed AI started pumping. Right? It's a very micro example of that, but I think you'll start to see these tokens almost move as a representation of how people feel about things in society.
Yeah, it's fascinating. I don't think it's going to stop. I think it's only going to accelerate, and there's going to be more of them. Doesn't mean that they're good. Doesn't mean that people should go put money in them. But it's going to happen, and it's worth paying attention to. Where can we send people to find you or find out more about Reflexivity Research?
Yeah, sure. You can find the research firm at reflexivityresearch.com. And then my Twitter is WClemente III.
Awesome. Thank you guys so much for listening and watching, and we'll do it again in the future.